Welcome to the Cash Flow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cash Flow Project Podcast. I'm your host, Steve Fierros with Tri-City Equity Group. Today we have Huber Bongolan on the show. I'm excited because Huber's Filipino, and I consider myself honorary Filipino. My wife is Filipino, so I'm excited to have him on the show. Huber's got a ton of experience, over 11 years in finance, both on the commercial, residential side. He's sourced over $1 billion in debt, both for equity financing for land, construction, bridge, permanent deals, basically all across the board in terms of lending and product types. So he's going to fill us in on the current state of the market, the lending environment, what he's seeing. So hopefully that helps us to get a little bit of insight in terms of our investing journey. So Huber, welcome to the show.
Steve, really appreciate you having me on. Absolutely, you're an honorary Filipino. You're one of us now. Thank you for having me on the show. And I'm looking forward to talking with you, having a conversation, and hopefully providing some helpful tools, some nuggets for your listeners today.
Yeah, awesome. No, we're glad to have you on. So, for those that don't know, we're just joking, kind of off camera. I'm Mexican Spanish, but my wife is Filipino. So I've been I had my second wedding in the Philippines actually. So,
Nice.
love the Filipino culture and the people. So,
Excellent.
But yeah, so for those of our audience that may not be kind of familiar with who you are, fill us in. How did you get started in real estate? Give us a little bit of your background and on the lending side, and just how did you get, what was the draw?
Absolutely. I live here in Southern California, been in Los Angeles, Orange County, my entire life, San Diego, my entire life. I started on the residential side really in college. I didn't know about the commercial side, apartments. All I knew was homes. And when I was younger, it was really something that my parents, my mom, my father, my uncles, my aunts, they'd always talk about that passive income. What was that concept of it and how they were using real estate, residential homes in order to accomplish it. So when I was in college, that was really my start. High school and college was just being at that table, listening and learning from them. In college, it was 2008, 2009. I tried buying a home on my own, and I didn't realize there was this huge recession, global recession going on around me. My father's the type where he says, son, go do it on your own. I'll be here to catch you if you fall, but figure it out. You can do it. And back in his day, right, there were things like a lot of different financial tools going on where you didn't necessarily need a down payment. You didn't necessarily need full credit history back in the 70s, 80s, 90s when he was coming up. 2008, 2009, world was coming to a global crisis. I tried to buy a home on my own. And for me, that failure, that not inability to accomplish that dream was more, it was like, ooh, that was a chip on my shoulder. It was a dream deferred. So my first job out of college, I said to myself, I want to always choose jobs where I'm learning something that I can put into practice for myself. So I joined a residential finance brokerage to teach me everything it took in order to buy a home so that I could start buying these properties as passive income for myself. Once I accomplished that, started looking around. I'm like, hey, wait a minute. I see these apartments, more units. I see hotels, I see office, retail, but really these apartments, I have a single family home. I am investing in these for passive income, but now I'm seeing these apartments and I have no idea how to finance those. My world was loan to value ratios, credit scores, debt to income ratios. Those were the metrics that I was involved in on the residential side. I didn't know about cap rates. I didn't know about NOI, right? DSCR, debt service coverage ratios. Those were terminologies that were not really used as much on the residential side in my knowledge. So I was fortunate enough to get into business school at the University of Southern California. I did both their business program as well as their real estate program. Those two programs really afforded me two things. One, it helped me leapfrog my knowledge. It gave me a lot of knowledge fast, right? And I think that's the goal of higher education. As well, you're learning from these professors who both match the theory and they're doing it in their respective lives as well. They are developers, they are investors in commercial real estate. So pairing the theoretical with the practical was huge for me in graduate school. And then after graduate school, when I finished, I was lucky enough to get a role at a commercial real estate finance firm that specialized in capital markets brokerage. I worked under one of the founders for about 3 years, learned as much as I could. Like I said, pairing my residential knowledge now with the commercial side, just being a sponge, learning as much as I could under him. And then 3 years ago, I transitioned to a startup called StackSource, where we're trying to introduce technology to parts of the process when it comes to financing your commercial real estate deal. We're trying to introduce technology to the parts that make sense, the parts where you scratch your head and say, this could be done a little bit faster. This could be more efficient. I should be able to look at this on my phone. We're not here to replace the human aspect. You still have to be boots on the ground, talking to people, feeling it out, talking to sellers, talking to buyers, talking to your clients, talking to lenders. But there are parts of the process that we can digitize, and that's what StackSource is trying to accomplish while getting data in real time on what is going on in this industry. And I'm sure that's going to lead to a couple other questions on what is going on.
Sure. No, for sure. Yeah. No, and that's cool. So like I'm for one, it's like just picked out a couple of different things there from, you kind of given a brief history there. For one, that's awesome. Like to me, like mindset has always been a huge deal for me. So for you getting that kind of initial denial or not being able to qualify, you didn't immediately just say, okay, well, I guess that's not for me, and, kind of go walk away and okay, well, I guess I'll do something else. Right. It's like, all right, no. Okay. Well, how can we make this happen?
That's
right. Like it's and that's always a key question, right? It's like, all right, well, we get, compensated for solving problems. Right. And so it's like, in that case, you're solving your own problem. Right. And so
great way to put it.
That always jumpstarts, great things whenever we face the challenges. So, so that's great. And then, you mentioned the technology aspect, and integrating that into, kind of traditional practice, right? It doesn't take away, but it's there to augment. It's there to, not change but like help us to analyze deals quicker, or utilize any and all tools available to us, right? Like to be able to make better decisions, especially on the investment side. I think that's so key. We live in a very unique time, right? Where we have like the last 10 years, let's say, like there's different investment strategies, like there's new software tools. I mean, and I feel like every 6 months there's a new tool. So that's great. Being on the cutting edge of being able to implement that, a first mover's advantage, right? So whatever you can have as an unfair advantage, like into the marketplace, that's huge. But yeah, we were kind of leading into that. We were talking a little bit off camera, right? Like a current state of the environment or the market. How do you see, like, what are the big challenges that you see right now for investors? Maybe on the residential, commercial, like, because we're all facing it, right? It spills over.
Yeah, it is no secret that it is getting tough out there. And as economic conditions deteriorate, as interest rates continue to increase, it's going to get tougher and tougher. So to be specific on that, what I'm seeing is you're seeing sales activity go down. And I think you're seeing that both on the residential side. I know you're seeing it both on the residential side and the commercial side. What's happening is sellers of real estate, whether it be residential or commercial, are still expecting prices to come in at 6 months ago levels, 3 months ago levels, when that's just not the case anymore. And buyers are coming in saying, we're looking at the future and we're looking at a 2023 that may not be as rosy, and most are expecting it to not be as rosy as 2022. So our buying offer to you is going to be much lower than where we think the market is headed. Cap rates are going up, values are going down. We're going to give you that offer. So right now you're seeing a lot of sales activity decreasing, because there's a mismatch between what the sellers are expecting and what the buyers are offering. Now, at some point, there is what I like to term come to Jesus moment, right? Where the people that are able to hold on to their properties will say, fine, I'm just going to take it off the market and I'm going to wait and hope for rosier skies, or I'm going to change my business plan around and I'm going to tenant these properties, and instead of selling it, I'm just going to hold on for hopefully it comes back around, and then I'm going to tenant it myself, and then I'm going to property manage it myself and just hold on to this asset, right? People that can do that, great. And a lot of them are doing that because they're saying to themselves, if I couldn't get that price that I wanted, then forget it, I'm just going to hold. The people that don't have that luxury are the ones where there is a balloon payment coming due, or there is a 1031 exchange where they have to find another property. There is some type of line in the sand, a deadline, a date that they're working towards that they had expected in their original business plan maybe 12 months ago or 6 months ago, right? Maybe you're a flipper of a home and your goal is to move, like have these properties churning. get them stabilized, get them fixed up, and then get them sold. So you have a date, a line in the sand. The people that have those, that's where you're going to start seeing their pricing coming down, because they have to. If the buyers aren't offering it, then they have to accept it. So that's where you're going to start seeing opportunities with people that have either maturity dates on their loans, or they have something in their business plan that requires that maybe their investors are demanding their money back. There's something in their business plan that requires, and that's where the opportunity is going to be if you're a buyer, finding people in those predicaments.
Oh, for sure. Yeah. I mean, I actually just came from a couple of national conferences with, for one, investors in every different facet, commercial, residential, all different, methods of investing. Because I mean, you can do long-term holds, medium-term, short-term, right? And we kind of do a bunch of that too. And then also on the commercial side as well. So, but yeah, I mean, I talked to a number of flippers that are just having to completely change their strategy, because they're exactly what you just said, right? They're sitting on inventory. They're sitting on hard money. They're sitting on this high interest, debt. And they do have that hard line in the sand where it's like, I can't hold this like this. And, if it's really what I'm seeing is it's really, people are having to have that come to Jesus moment where either they learn a new skill set, right? And learn a new strategy. Or have to consider something that they didn't previously do it. Like a lot of the people I was talking to, they're flippers, so they're not buying hold guys. And so so they're coming to me. I'm like, Steve, I've got 3, 4, 5 flips that have just been sitting on the market, and either they're willing to just slash their prices just to kind of move inventory and move on from them, and they're willing to take losses, and from what they were telling me, or hey, you know what, maybe they'll come to you and say, hey, I need a portfolio. I need a blanket, commercial loan, to bundle these things up, and I'm just going to have to sit on them for the next year or two, move them into long-term holds, and I'll just wait for the market to turn. But they hadn't considered any of this before.
Thank you, Steve. That is exactly as a pitch. That is my specialty. Is when someone needs help with the financing side, you need more time. You need someone to replace your old lender or your own line. That's where I come into play. Is helping out my clients figure out financing solutions to any problems they might be facing. So thank you for that.
Yeah. And this is something that I learned too. Like, I don't know if you were, maybe you probably just missed it, or no, actually you were trying to house buy at that time. I was a wholesaler during subprime, the fallout and the meltdown, the Great Recession and all that. But I only had a couple of tools in my tool belt. I only knew how to wholesale. And so if wholesaling wasn't working, things got too tight. I had to step away from the business. And so like now what you're going to see is people either have to get creative, they have to add more tools to the tool belt, whether that be through a different investment strategy, whether that be through finding a new debt tool, because if you can take that high interest debt, let's say hard money, private money, and, refi out of it, even on the commercial side, like bridge debt, put it into some long-term financing, something that's lower interest. Those that aren't willing to do that are going to, they're going to sink, right? I mean, they're going to have to be forced out of the business, take massive losses or whatever. This is all cyclical. We hear this time and time again. So, that's where it comes, the savvy investors, are going to make it through just fine. And then, you got people like you where, okay, well, hey, I'm here. Let's talk about what kind of, tools, what kind of resources do you have to help some of these investors out on that end of things? Are you seeing more refinances for, some of that higher interest debt, bridge financing, or, hard money? Like, what are you seeing? What kind of volume are you seeing in terms of, no refis, or purchases? I mean, obviously volume has been down across the board, but I don't know if you're seeing anything in particular in your market, or if you guys, do you guys loan on stuff nationwide, or what's your?
Absolutely. So StackSource is a nationwide company. We have since I'm the director of capital markets, I head our capital markets division. So we have 922 different unique capital providers that spans the spectrum: banks, credit unions, life companies, debt funds, private debt, private equity. There's 9 different ones, right? Agencies, you name it. We want to have relationships with any type of capital, because that's where we add value to our clients, right? You mentioned something about the savvy investor is going to be okay. Well, I think the savvy investor is going to be okay because they have 2 things. They have relationships, and they have the experience of knowing the different types of investment strategies that they can pivot to. I think people get into trouble when they have one strategy, or they only know one strategy that's worked for them, that's been their bread and butter. The market's now changed. and they either can't or they're not willing to change their strategy to adapt to the times. That's when you get into trouble. So the savvy investors have both the experience and the knowledge on knowing how to pivot, and probably the feeling of when to pivot, because they've done this so many times, or they've been around the block and been through a couple of recessions. So they know when it's time to have a feeling of when to do it, and they have the relationships to be able to pull it off. Where StackSource comes into play on the financing side is we provide you those relationships in order to figure out, and also advice, right? We'll give you advice on, hey, have you thought about this business plan? We've seen other people similar to yours pivot to this or try this out. But our bread and butter is the financing side, of course. So you asked some of the things that I'm seeing. We'll talk about residential side and the commercial. We specialize on the commercial, but I still love, at the economist inside of me just loves tracking and seeing on the residential side. I'm sure you've had people talk about this before, but with interest rates rising, you have less buyers in the market. Less buyers in the market, homes are taking longer to sell. A home that you could have gotten 30 bids on in a weekend, now it's sitting on the line for 3 weeks, 4 weeks with no bids. You're starting to see much more prices coming down, right? You're seeing a lot, and I'm sure Zillow will post about this, or any data site, where you're seeing prices being cut in order to try to get things moving on the market. So between both sides of the industry, residential and commercial, interest rates rising are having a ton of ramifications. On the commercial side, of course, with interest rates rising, you're seeing a lot more things being what we call constrained, like the loan amount that you're trying to get, by your debt service coverage ratio. Mm-hmm. Those are getting much tougher because with interest rates rising, it will lower and constrain the loan amount that you can get. So let's say someone is trying to do a refinance, and maybe they're trying to pull cash out because they want to hold on to cash in these uncertain times and wait for strategic opportunities of distressed properties to arise. You see that business plan a lot. You want a war chest of cash, so that way when there's a buying spree ready to occur, you have funds ready to go. Well, if you have a bunch of properties that have equity in them, even though on a loan to value ratio, you should be able to get, let's call it $5 million out of it, because lenders also look at another stipulation called their debt service coverage ratio that is directly tied to interest rates. That $5 million is now constrained to 3. And you're seeing that across the board, where if someone is refinancing, they can't pull out as much cash out because of that happening, right? I would say another trend that we're seeing in the industry, because people are deal movers. They want to do deals, right? And it's harder to do deals when the future is less certain. So instead of buying something at a, let's say, low cap rate and kind of holding it and banking on appreciation, because that's another discussion, cap rates, interest rates, how they're all tied together, and why what I'm saying here, while I'm seeing people move away from that strategy, they're looking at more value add strategies, which moves itself to more hard money type plays, debt type plays, because you may not know what's going to happen this next 6 months, right? Everything's changing. Interest rates are rising, right? But if your business plan requires like a year to pull off, right, then within that year, you can pivot, change. You have a loan for a year to 2 years, maybe some extension options in there to weather the storm if things get worse. And during that year, you're working on various value add strategies. And it could be as easy as, hey, we want to increase rents, right? Or it could be, we're going to beautify the property, renovate it. There's some deferred rehab that we haven't done in a while, and that's going to lead to increased rents somehow, or increased property valuations. So I'm seeing and a lot more value add strategies coming in, or a value add to the value add, which is a harder pitch, but it's, hey, they had a value add strategy, they ran out of time, now they need more time, and they're pursuing a secondary value add. And now we need to find another bridge lender. We call that a bridge to bridge. We need to find another bridge lender that'll buy off on this second pivot, this pivot to a new value add strategy. But you're starting to see more bridge to bridge type opportunities come up.
Yeah, no, and I think it's a great way for investors to protect themselves too, right? You're creating more value. You're building it. I mean, that's the nice thing about commercial, is that you can create more value, right? On the residential side, you're much more limited, right? It's like, okay, well, what's the market doing? What are the neighbors around you selling for?
That's right.
Right. So, like, what are the comps dictate that your value is? And in this kind of market where you're seeing seller incentives, and you're seeing reduced prices and all this kind of stuff. Let's say somebody on the residential side really getting really getting squeezed in terms of what they can do. Whereas on the commercial side, it's like, maybe we weren't planning to renovate these additional units or implement this different strategy, right? Reduce these expenses or whatever with the initial plan. But yeah, being able to transition to another bridge lender. I mean, we've run into that before. So I know, we know the feeling of, being on that. It's effectively like a lit fuse, right? It's like, okay, well, we got to get this thing moving.
Right.
So
right. We need more time or we need more money. That's usually the reason.
Exactly.
And how do you package that up?
Yeah. How do you package it up? How you sell it to investors? Depending on what the strategy is, right? But
for sure.
Yeah. Are you seeing more activity, let's say, because you guys are nationwide, are you seeing more money flowing, into certain markets, out of certain markets? There's some, we talk about it a lot within our, our own team, like let's say geographic diversity, that can be a hedge as well. Like, for one, of course, value add, creating value and all that kind of stuff. But then, I don't know if you're seeing increased activity or, money flowing to certain markets or out of other markets, that kind of deal.
The Sunbelt states has been the theme for like the past 5 years. So for anyone that may not listen, they call it the Sunbelt states or the Smile states. So if you look at a picture of the United States, the Sunbelt states is like where the sun kind of it's kind of the southern region of the state. So you can think like technically Southern California is a part of it, but there's a lot of pros. So I think of it more so as like Arizona. You go the bottom half of the U.S. and you go Arizona east all the way to Florida. So it was the best kept secret previously, like maybe 4 years ago, right? If you were in the Sun Belt 4 or 5 years ago, then you are killing it today. I have not seen a change in that as far as where money likes to flow. I'm still hearing that money is wanting to flow. And when we say money is wanting to flow, both on the institutional equity side and also the debt side. When I'm in as the director of capital markets, like my job is like talking to lenders, talking to investors, talking to mezz prep providers all day, people that are supplying the capital. And it's where do you want to go? And a lot of that is there's two answers. The first one is top 10 MSAs. So metropolitan statistical areas, the top 10 MSAs, you can think like your gateway cities, because they just want to be in safer areas, especially, again, things are less known today. Things are scarier today. So you hear top 10, top 20 MSAs, got it. Primary markets, got it. That's always been the case for people, but especially in harder times, money likes to stay in those tried and true areas. And then the second answer that I hear a lot is those Sunbelt states from like, no, take the South and then go from Arizona all the way to Florida. So at StackSource, we actually have majority of our business in Texas. So I'm in California. We have capital advisors nationwide, and we see a lot of activity in Texas. Now, why is that occurring? That we can talk about that. But it could just be it's one of the biggest states in the continental U.S. outside of Alaska is not continental, but Texas is the biggest state, so you're going to see a lot of traction there. But it also begs to an answer to your question of where is money liking to flow, and Texas seems to be a hot one for us.
For sure, yeah. We're I don't want to say guilty of that, but it's part of our strategy because we've been seeing the same thing. We've been divesting out of some of the markets that we were in previously that are when the market is hot and money is cheap, yeah, you can take some more risk, right? And then once you're moving into a little bit tighter environment, then, okay, yeah, let's kind of do the same exact thing, right? Moving into the Sun Belt or, increasing positions, into there. We closed a couple of deals in DFW this year. And yeah, we've, been looking very hard at Texas, and been, offering on things, there for a little bit, for a while now. So I grew up in San Antonio, so I'm seeing the growth there has been tremendous.
Yeah.
I can't give myself for not having bought
very hot
there. Oh my goodness.
Very hot right now.
Yeah. Mm-hmm. Yeah. it's an affordability thing, I think, for one. And I'm not a political guy, but, I think for anybody who's been paying attention the last couple of years, throughout COVID, just the safety of, where are jobs going, who's open, who's not open, who's pro-business. And these are all things that any savvy investor should, factor into their decisions. Like, well, regardless of your political affiliation, you need to go where it's safe and smart for you to invest as as an investor, right? As both for you individually and also for your investors, if you're raising money or, whatnot. So, that's we've been doing the same thing. So
Steve, you just mentioned something that a mentor of mine also mentioned. And I hope your listeners pick up on it. Follow the jobs. So I've listened to that. Like a lot of people may not. It's like, where do I feel comfortable with? Where am I used to? And then My father taught me back in the day, it's like, oh, well, invest where you live because you know it, right? Well, that's maybe the older school knowledge. And then the newer, what I've been taught is like, hey, follow where the jobs are going. Where are they seeing talent? Where are they going? And then you'll see property prices, whether it be residential or it be on the commercial side, you will see them start to appreciate over time as those jobs become more entrenched in those specific areas. And I think Austin's a perfect example of that. You're seeing a ton of activity going into Austin right now.
Oh, absolutely. I mean, it's very simple. It's supply and demand, right? Every blue collar job adds, it's a 1-to-1. Every white collar job, it's a 5-to-1 in terms of job creation. So, follow the money, right? I mean, it's, who's pro business, right? Who's tax advantage, right? Who's offering, incentives for businesses to come there? Guess what? Those people need somewhere to live. So if you're the one holding,
they want to shop, they want to live, they want to have leisure.
Yeah.
Yeah.
No, I know. I run into that a lot, especially being in Hawaii because we're so isolated, right? So, and there's a ton of money in Hawaii, just because most people have a ton of equity because of just years of holding on to property and just appreciation rates and all that. But I see a lot of people that are really, and it's not just Hawaii. I just happen to see that firsthand because that's where I live. But there's so many people that are so reluctant to invest outside of their own backyard. And I understand it from Hawaii because you're thousands of miles away from, the closest, next state, right? California, the West Coast being that kind of deal. But I see so many people that just, they don't want to get started because, I just like how, you said your dad had mentioned your grandfather. It's like, okay, well, invest close to where you're at, and it's like, if that's what you need to get started, yeah, of course, I get it.
Right.
But eventually, you don't be afraid, right? You're going to have to reach, away. If the train is moving faster, if the money's moving faster in a different market, and that provides security and stability, do that.
Yeah, right? Exactly. It's like, hey, Dad, I looked at my entire market where I live within a 15, 20-mile radius. Nothing makes sense here. I'm starting to move. I'm just going to start looking elsewhere now.
Yeah. No, seriously. And there's just, I feel like there's too many people that don't fully grasp that and don't understand it. And then, they end up not investing. And it's like, gosh, we're facing inflation the way that we are, you got to get your money moving. I mean, you can't keep, money just sitting there, not doing anything, not working for you, especially without a plan, right? If you're doing it, like just like you mentioned earlier, if you've got, capital sitting on the sidelines waiting to jump in because they know that there's opportunities coming up, that's one thing. But when people are reluctant to do anything because, well, my market's too expensive, I just can't invest. Well, no, real estate is hyper local. There's activity somewhere. There's jobs going somewhere. There's a demand for housing in some market. You just got to find it.
Absolutely. So, right.
Yeah, that's awesome. Well, so what do you guys see for, the company moving forward? You guys obviously have a lot of different funding sources. Is that something you guys are looking to increase? Or you're in multiple markets at this point. So, or nationwide, what's the next step for you guys? Is it just helping investors weather the storm? Is it expanding? Like what do you see on the horizon for StackSource?
So StackSource is trying to grow as a company in multiple ways, and the easiest way to break it down is the operational side and then the technology side. And the operational kind of feeds the technology side and the enhancements there. I mentioned earlier in the call that StackSource wants to digitize and put online and make more efficient and use technology for parts of the process that makes sense, right? Well, we are still a capital at our heart, at our core. We are a capital markets brokerage. So our job is to help our clients find the right financing and solutions to their commercial real estate financing problems. That is the heart of what StackSource does. And we use technology in order to give us better data, in order to help us move faster. And of course, to help us be more transparent for our clients because we are working for them. We work for them to get the financing that, again, is right for them. The company itself, we are looking to grow. We're looking to continue to grow our tech side. We're really excited for a couple of things that are coming out soon. We have a new platform that is coming out, and a kind of a second iteration, the next level, version 2.0, what we currently have right now, that should make it much more seamless for our three key stakeholders, our three key users, in their experience with our tech. So that's the client itself, the one that's actually needing the money. That's the lending side, because you can't forget about them. We want to make their experience better too, right? Make it faster for them, because right now most things are done just by phone and email, right? the technology allows it to just move much quicker. To allow people to see more deals, because the more deals that you can see, the more that you can strike on speed. That's what we're at. That's one of the key tenets, the key values of StackSource. Speed and transparency is like our top two tenets. So the second user is our lenders. And then our third user is actually our capital advisors, the ones that work for us, because we want them to have a great experience as well. We want them to be able to say, hey, this platform is working. It's helping me service more clients. It's helping me get my deal in front of more lenders that are the right lenders for the deal, that should be bidding and should be competing against each other to win this client's financing. I want to get in front of the right people. I want it to do it faster, and I want to get quotes back in faster, because these guys are only getting paid if they close a deal, right? They want to close, especially in this environment. How do you get from engaging the client to closing, and how can you do that as fast as possible so that way you can keep servicing and growing your pipeline? So with StackSource, if anyone out there is listening and they are a capital advisor in commercial real estate, feel free to reach out. We are absolutely always hiring. And then on the technology side too, we are hiring on that side too, to try to, again, make things more efficient. We have like a laundry list of like projects that we would love to have enough time to work on and enough manpower to work on. We prioritize them like any company does, and then we strike on the ones that we think will move the needle the fastest. So as a capital markets brokerage tech startup, the name of the game for us right now is growth and multiple channels of trying to grow.
Yeah, that's awesome. And see, you don't have to listen to the TV, listen to the economists. There's tons of opportunity and job opportunities and all that kind of stuff.
Oh yeah, we're hiring. We are hiring. We're hiring analysts, right? We're hiring funding associates. We're looking for tech guys. We're looking for capital advisors. So you're absolutely right, Steve. The macro environment, the doom and gloom, that's what sells. So news is going to push that out there. You don't have, there's an opportunity, and you had alluded to, there's an opportunity somewhere. We even talked about, it's kind of a common theme in this conversation that we're having here, like looking only in your community. Okay, there's nothing here. Go look outside. There is something. If you want to look, if you're passionate enough, you don't have to just listen what someone else is saying. It's like you can find those opportunities that you're passionate about and move forward on them. So StackSource is absolutely that. It's not all recessions. Everyone's laying off. No, we're on the opposite side of that. We're trying to grow.
Right on. Very cool. Well, this is kind of the point in the show where we do a little bit of a fire round. It's just more of a kind of a rapid fire, brief answer. Okay. Question and answer. Is that something you're game for?
I am game.
All right, right on. All right. First question: what is the best book that you recommend, other than Rich Dad Poor Dad?
For real estate, I'll give you two. So for real estate and anyone starting off in real estate, it would be The Inside Track to Commercial Real Estate by one of my mentors called Stan Ross, where he breaks down all of the different players in the industry. I think a lot of people just, like we talked about, they have one business plan, one goal, and they just charge ahead on it, not knowing how everything is interconnected. And I love that book because it talks about all of the different players, what they all do, the personality types of each, how they're all interconnected. And I think that gives someone a very strong foundational knowledge as they're moving through their business plans and their careers, knowing who to call on, why to call on them, what they're used. So Inside Track to Careers in Commercial Real Estate by Stan Ross. That's on the real estate side. On the personal side, my personal favorite book is called Ego is the Enemy by Ryan Holiday. That one is close to me because there are points in our lives where we think we're killing it, we're crushing it. You're buying all of these units, trying hard. And then you have other points in your life where things aren't going your way. Ego is the Enemy was great to just keep me humbled and keep me in check. Where it's like, sometimes I think I'm king of the world and it's the ego talking. So Ego is the Enemy, Ryan Holiday. Those are my two favorite books.
Good stuff. Yeah. The Ego and the Enemy is definitely a good book. Yeah, we can't always be on the mountaintop. You learn stuff going down into the valleys and all that kind of stuff too. So yeah, it's
a quote that I think about from Warren Buffett the most is like, they're like, why you got it all, man? You're killing it. Why? And he goes, if the game's fun, if I hit a hole in one every single time, it's not fun anymore. So
that's the challenge.
Sometimes you take the losses, you take the wins, and that's life. And you keep growing.
Yeah, that's it. All right, next question. What would you consider as your superpower?
Ooh, for me, I think my superpower is I'm very extroverted and I love talking to people. So I think that my extroversion / personability and just learning from other people, love networking. So let's say networking is my superpower.
Right on.
I
That's
love
awesome.
that.
That's a huge superpower, especially in investment, and especially in investing and life in general, right? That's always serves you well. So,
and it can be worked.
right.
It didn't come naturally to me. I was the type where my first couple of ones that I went to, I'm in the corner of the room, kind of embarrassed, shy, and then you just keep going, pick up tricks that you keep going. And then now it comes very natural. So it's absolutely a superpower that can be learned.
Yeah, that's awesome. That's a great encouragement to all of all of the listeners out there. I have always considered myself an introvert, and we kind of laugh because it's like, well, I emceed our conference this past year. That was several hundred people out. I've taught and trained like I don't know how many people at this point.
Yeah,
coming from an introvert, it's like it can be learned. I agree with that. So they're very cool. What's the biggest lesson that you've learned over your career? Can be, life, business, whatever. Like it's just a key takeaway, key lesson learned.
Yeah, show up. A lot of opportunities, things that I've learned just because I showed up. It's so easy. Like we're doing this on a Saturday morning, right? This podcast, it's so easy to just be like, I don't want to do it on a Saturday. I want to shut it down. But like we've had a great conversation. I don't know if this is gonna hit the air, but we've had a great conversation off the mic and on. And now I feel like me and Steve know each other. He's part of the honorary Philippine. We're friends now.
Right.
That only came about because we showed up. He showed up today and I showed up today. And that I think is a big lesson for me is like, hey, you may not want to go to that networking conference. But if there's not a competing interest for it, you have the time, you're able to do it, right? Show up and you never know what could happen from it.
Oh, I love that. It's like, you're one conversation, you're one contact away, right? Like you're one great idea from, being able to, something to be life-changing for you. Like, seriously, right? Like, so
absolutely.
Yeah, that's awesome.
Absolutely. You don't know who you're going to meet. You don't know who you're going to meet, where you're going to talk to, or if someone sparks an idea that you wouldn't have thought of on your own. And now it all starts coming together. So yeah, for me, the biggest lesson, and again, it goes to that networking thing because I was scared in the beginning, very scared. Like I was young. Everyone was much older than me. It was like, what am I even doing? I'm the residential guy. This is a commercial conference. I don't understand half the things you're talking about. Then you just show up and keep showing up, and the consistency pays off over time.
Oh, very cool. Yeah, that's a great takeaway. That seriously. All right. So for the busy working professional, that's trying to work towards financial freedom, what advice do you have for them besides show up? Because I think that's actually pretty key.
Yeah, for the busy financing, it's This is a good one because I try to think about this myself where it's you're not too busy. You just didn't want to make the time to prioritize it. Because I'll say that sometimes myself personally, if it's like, hey, I'm too busy for that. You're a busy working professional. You absolutely are. There's all these competing interests for your time, right? And I think there's a difference between like, hey, I really was busy, or I just didn't want to go to that and I didn't want to prioritize it. And knowing when to be strategic about it. Don't say yes to everything. You can't say yes to everything. You're a busy working professional. But I wasn't being strategic, or I catch myself sometimes not being strategic with my time. It's like I'm just prioritizing what I said yes to first, instead of actually saying, wait, which one actually is the better thing, the better use of my time? Maybe family time that's the best use of my time this week. Maybe it's that conference. So instead of me just being, oh, I said yes to them first, I need to honor that. It's like, what is actually the best use? Being more strategic about it, and then being honest about like, hey, who am I letting down, and just letting them know why. Yeah, it would being strategic with my time.
No, that's huge. I mean, time is so valuable, and like learning, and I've struggled with that too. But learning just like that, learning to prioritize, learning to be strategic, learning to say no. I think it's actually really, really huge.
Exactly. Yeah. Learning to say no. And then, you may not want to, I don't want to say you don't want to burn a bridge by canceling on someone. So you just be honest with them and just tell them like, hey, but I'll make your next one, or something, just be honest why you can't make it. Yeah. But if you're a busy working professional, that's absolutely something that's going to hit is like, where do you find the time for all this? I don't have the time. And it's like, well, actually it's just, I didn't want to make the time, or I need to be more strategic on what I say yes to and what I say no to.
Right on. Yep. No, absolutely. I totally agree with that. Well, you know what, if our, listeners, they want to get in touch with you, if you've got capital partners that want to, hey, how can I get some, return with you guys, or I need some lending help, how can the audience get in touch with you? What's the best way to reach out? And
number one would be LinkedIn. I try to be vocal on LinkedIn. My name's pretty unique. So Huber Bongolan, maybe you just put Huber, you might find me. But LinkedIn is maybe the number one way. And then number two, I would say StackSource. So go into StackSource.com, StackSource, StackSource, and you'll be able to find us there.
Awesome. Well, thanks so much, Huber, for hopping on the show with me today, and kind of filling in our listeners with a little bit of insight into the lending side, and just kind of giving your general insight onto the state of the market. To our listeners, if you're interested in investing with us, go to tricityequity.com. To learn more about what we've got going on. Different ways of investing, and just finding out more about the commercial side of real estate, multifamily investing, and whatnot. To connect with like-minded investors, join our Facebook group, How to Know Multifamily and More. You definitely connect with other real estate investors, whether it be residential, commercial, or if you're local, we'd love to see you out at one of our local meetups. And if you found value in this podcast, of course, please subscribe. We'd love a 5-star review. And if you know anybody that might be resonating with this type of information, make sure you're sharing it. Make sure you're letting people know to tune into the podcast. You can find us on Apple Podcasts, Spotify, really wherever you listen to your podcasts. So, but it's been an awesome pleasure to have Huber on the show with us today. And so super excited for you guys to go out and take some action to learn a little bit more and to better yourselves in your real estate investing career. So, all right, guys, we will talk to you soon. Aloha. Thanks for joining us, and we will see you in the next episode.